The first one, overall consideration. When I talk about the overall consideration, this refers to the major considerations an entity should keep in mind when they prepare and present a financial statement. Okay, so the first consideration is nothing but true and fair presentation. True and fair presentation. We know what do you mean by true and fairness and all, right? Okay, we chartered accountants, we are learning about true and fairness in our auditing. So the financial statements prepared should be presented in a true and fair manner. Okay, and how this true and fair presentation can be ensured? The true and fair presentation can be ensured only if it complies with what? Compliance with the financial statements in days. So compliance with Ind AS. Okay, now what is the next one? The next one is the going concern principle. So a financial statement should be prepared considering the going concern principle. So what is going concern principle? We know about going concern principles. I am not going into in detail. So whenever you prepare a financial statements, we assume that the going concern assumption is valid for the entity. And if it is not valid, then what we have to do? We have to again recast all the assets and liabilities of the financial statements to the realizable value. Okay, so the financial statement should declare or disclose the fact that the going concern assumption is valid. Okay, if not, make necessary adjustments. Now, next one, accrual basis of accounting. Accrual basis of accounting. So the financial statements are prepared on accrual basis. So accrual basis of accounting is one of the overall consideration. So all the entities are required to use accrual basis of accounting except when you are preparing the cash flow statement. So except for cash flow statement, all other components of financial statements should be prepared in accordance with accrual basis. The last one, fourth one, presentation and consistency. Okay, what do you mean by presentation and consistency? An entity is required to retain the presentation and classification from one financial year to next financial year. Means what? Whatever presentation or whatever classification you had adopted in the last year, same thing should be followed in the subsequent year also. Year by year, you can't change the presentation, you can't change the classifications. Okay, so the presentation and consistency, very important. Presentation and consistency. So consistency could be for two things. I can say the consistency should for classification of items, then it could be for adopting accounting principles, adopting accounting policies, principles, etc. Then next one, disclosure. So in all these three factors, you need to have what? Consistency. Consistency is very important. Next, any financial statements will be prepared considering the principle of materiality and aggregation. Materiality and aggregation. Okay, let's assume a company like Reliance. Okay, Reliance will have, just assume Reliance will be having a turnover of, let's say, at least 1 lakh crores, right? If you take the entire Reliance group. Okay, now if Reliance company is going to list down the expenses in the profit and loss account one by one without aggregating similar heads into one, what will be the state of that financial statements? How many items will be there in the financial statements? Numerous, right? So merely listing the nature of expenses without any logic is not going to help the users in the financial statements. So, Ind AS 1 asks you to aggregate similar heads when you disclose it in the financial statements. You have something called office expenses. Within office expenses, you might have 100 items, but you have to club it together and show it as one item. Repairs and maintenance. The repairs and maintenance could be for anything and everything. Can you write repairs and maintenance for computer as a one item, repairs and maintenance for, let's say, office furniture, another item, repairs and maintenance for, let's say, electrical items, another item. So if you keep on writing this, then what will happen? Your financial statements will become very big and it will not serve the purpose, it will not serve any purpose to the users. So aggregation. Similarly, materiality. To decide the aggregation or which all needs to be aggregated, which all should not be aggregated, you have to use the principle of materiality. Okay, a company like Reliance having a turnover of, let's assume, 1 lakh crore need to have a materiality. Anything, let's say, even those items which has got a value of, let's say, 1 crore is not material for Reliance when it has having a turnover of 1 lakh crore. Okay, so materiality and aggregation. Again, that's a fundamental principle, fundamental consideration when you prepare the financial statements. Next, principle of offsetting. Principle of offsetting assets and liabilities or income and expenses. Offsetting. What do you mean by offsetting? Suppose there is what you call as income tax asset and income tax liability. Can I set it off? Can I offset each together? You have a liability to employees, you have something receivable from employees. Can I set it off? Let's say you have salary advance given to employees and you have salary payable to employees. Salary advance will be shown under asset, salary payable will be shown under liability. Can you set it off? We have to see the principles which are given in Ind AS 1 for offsetting the assets, liabilities as well as income and expenditure. Okay, we will come to that. Right? So that is the next one. And the last one, comparative information. The sixth one. Comparative information. So Ind AS says that whenever you prepare the figures or whenever you prepare the profit or loss statement as well as balance sheet, at least you have to give 1 year comparative information. So comparative information at least for 1 year you have to give. That is what Ind AS 1 says. So the overall consideration, true and fair representation, going concern, accrual basis, presentation and consistency, materiality and aggregation, principle of offsetting and comparative information. Okay, this is the first grouping.